What's going on, everybody? It's Joe Giunta with Trend Trading Academy. I'm here to help you trade and get paid. And I got one that you guys have been asking for, probably for months, really. I've been kind of slacking on getting this one to you. But today, all that changes, and I'm bringing you the video you've been asking for, how to use a trailing stop loss. This is powerful because this is going to help you both in strategy and in risk management. So very, very powerful video coming. If it brings you value, go ahead and hit that like button, subscribe, hit that notification bell, help us push this video out to more and more people, and you get notified every time we drop new content. If you want to become a student, go to trendtrading.academy. And if you want that brand gear, that merch, that Forex wear, or you want that trading journal, then go to tradinggetpaid.com. For now, let's roll that intro. I'll see you on the charts.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. When you trade and get paid, trade and get paid, trade and get paid, trade and get paid, trade and get paid.
All right, guys, so let's jump right into this. We're looking at the GBP AUD 30-minute chart, and we're going to talk about the trailing stop loss. So first thing we're going to do is we're going to look at this setup we have here. We got some trend line here. We got some movement here, and we had our first little breakout. And many times the first breakout is the fake out, right? And if you want to know more about that, you can join the academy, and we actually have a thorough class and teaching on how to trade fake outs, which is fire. So, you definitely want to check that out. But so here we have points, 1, 2, we got this third one here. It's a fake out. And now we're, kind of looking and seeing how is price going to react around this trend line. So what we really want to do is we want to see price either reject this trend line and push away, or we want to see this, break, and this was the fake out. Here's the breakout, and take it for a sell, okay? And before you guys start talking about how I'm trading against the trend, I've been getting some hate about that lately. That's all right. I'm cool with the hate. I'm all right with, but let me just go on and tell you that every single trader, all right, all traders trade against the trend. In fact, so much so that I'm dropping a video about it next week. I want you to, tune in, hit that notification bell, because I'm dropping a video next week. It's going to premiere next week that is going to prove and show you why all traders trade against the trend. So don't listen to that nonsense about the trend is your friend. I'm about to show you the real truth. All right, guys? So on that note, let's see what happens here. All right. We see that price begins to push through and break out. Now, if you're a breakout trader, you took the sell when price broke this trend line. If you're a retest trader, you waited for this retest right here and entered at the retest. So either way, we're entering at the line, and whether you're a breakout or a retest trader, that's what will be determined right there. So we're talking about a trailing stop loss. If this is your entry, where do you set your stop loss? Well, I get that question probably about 20 times a day. And the answer to that question is you always look to previous market structure. So if here's your entry, well, here's your previous high. Okay? Now you could try to go tighter right in here, because we do have proven structure. So now, and you see also how, the entry area is also lined up with structure here. So you have, everything looks good. We have the little breakout of your trend line. We have it at a structure level, breaking through, and we have some structure here, here, and here. All right. For this trade, I'm going to say, I think we go right here. You see this most previous high, and we're going to go just outside of that high right there to set a stop loss. So let me drop a line on that for you. All right. And we're going to make that line red for stop loss. All right. So your red line is your stop loss. And in this case, you actually can make it a little bit tighter. Just right there. All right. So in this case, you're going to go from entry to stop loss, and you have a 46 pip, almost 47 pip stop loss. All right. So you say, oh man, that's too big. Well, stop that, because percentage-based trading doesn't matter how many pips is in your stop loss. We're going to risk 1% no matter what. You adjust your lot size based on how many pips is in your stop loss. All right. That's another video for another time. So if you don't understand that, go back and watch my 1,000 to 6 figures video, and that'll show you percentage. All right, so we have a stop loss here. Now, how do we know if this trade makes sense? Well, here's the thing. If we believe this is a breakout of this trend line, then we believe what? That price is going to break out, and it's going to go to the previous levels of structure. So we think we know that we're going to go at least here. Okay, to this level. So let me drop a line there. Okay, let me drop a line right here. And we're going to make that one blue. And that is going to be your take profit 1. And then we're going to go down here to this previous, the beginning of all this. And that is going to be your take profit 2. All right. So from here to here is 46 pips. Well, from here to here is 75 pips. So, you're looking pretty good. You're 1 to 1.5. If you end up getting all the way down to your take profit 2, you can see here, you got 130 pips. All right, so that would be insane. We're just going to focus on take profit 1, and we're going to go 1 to 1.5, and we're going to be pretty happy that we have a little bit better than 1 to 1.5. All right, so let's look at this with the measuring tool. We're going to use the short position tool right here just to kind of give you a visual. And so from here to here, and from here to here. All right, so at this point, this shows us that we are looking really good. We're looking really good. We have a 1 to 1 to 1.64, so we're better than 1.5. Looking good, good risk to reward, and we're happy. All right, so at this point, let's see what happens with the trade. All right, going in the right direction. All right, a little pullback, going in the right direction. So we're moving in the right direction, and as you see here, we end up pushing. We hit our take profit. And so we're looking good. So let's look at this for a second. Now, here's where a trailing stop loss comes into play, because when you entered this market and it started to go in your direction, remember that risk to reward that I showed you. Okay, I want to leave that on the screen for just a second. I'm going to show you something here that is actually quite powerful. All right, so right here at entry, we are a 1 to 1.64, 1 to 1.6, whatever that looks like right there. All right, okay, so we're looking really good. We're better than 1 to 1.5, and we have a really good risk to reward. Now, here's the issue. As this price moves and goes in the direction that you want it to go in, it is a positive for your profit, because, of course, your trade is winning. You're in the blue. You're looking good. However, guess what? The further down you go, or in this case, it's a short trade, so the further in profit you go, the further you are from your stop loss. So what I mean by that is this. Let's look at this little blue pullback candle right here. From that blue pullback candle, you are in 25 pips in profit. However, you are 71 pips from your stop loss. You were 46 pips from your stop loss. Now you're 71 pips from your stop loss. And you are 51 pips from your take profit. So at this point, when you hit that little pullback candle, you are in 25 pips of profit. But if you leave your stop loss where it is, you are no longer 1 to 1.6 in a risk reward. You're now having a risk reward that is against you. You're losing this battle now. Let's move this middle and see what happens. Look at this now. Now you're 0.71, so it's against you. You're about 1.3 risk and 0.7 reward. So now your stop loss is bigger than your potential gain. All right? So that's obviously not good. So what we want to do is we want to negate that. And how do we do that? We do that with a trailing stop loss. So here's what we do. As price moves down and gives you this little pullback, you see it playing around down here, and now we look like the pullback's over and we're pushing back. Here's what we're going to do. We are going to take our stop loss price and we are going to move it into profit. So what we're going to do is we're going to look at previous structure. The same way we looked up here, we're going to look over here. And right here, we see these little wicks. We see this little supply area. And we're going to move our stop loss right into about here. Well, now look. Look at how that looks now. We actually put ourselves in a position where we are now 2.47. We are now risking 1 for every 2.147. This is an amazing risk reward. Why? Because we moved our stop loss into profit. Right now it's right past profit, just about break even. If price was to happen to go against you and hit your stop loss, the worst that could happen is you made a couple of bucks. Maybe you broke even after fees and, spreads or whatever. But at least you didn't go and lose all of your money again. You secured the bag immediately. Now look what happens. As price continues to move down and you get the next pullback. Look at this next pullback here. You see price move past the pullback, right? Look at this. You see how price, look at this little sideways movement, drop, base, drop. So you see where it gathers right here, gathers liquidity, drop, base, drop. Once you see that drop is cleared, okay, what I mean by that is this is your base, not your drop, your base, okay? Once you see that cleared, so this candle right here, you are ready to move your stop loss again. So where's your previous structure now? Well, here, right here at this wick. So you're going to bring your stop loss right down to here, just like this. You're going to move that stop loss. Let me move my mouse over. Move that stop loss just outside that wick. Okay? And now look, you are 0.82. Now here's where you get to have to make a decision. All right? You are now close to 1.1. You're still looking good. Now at this point, here's the thing. From entry to where the current stop loss is, right? You look at that red line. You are now 30 pips into profit. You're basically 30 pips into profit, 29.5. All right? So right now, you are guaranteed that you are going to make 30 pips of profit. If this trade turns around on you and hits the stop loss, you win 30 pips. You win on a trade that hits your stop loss. How awesome is that? So you've guaranteed yourself 30 pips of profit. All right? Now you're 1 to 1. You're at 1 to 1.8, 0.8, which is, not in your favor, but you're still pretty close. So now you have a choice to make. Do you want to ride this to your take profit? Because there comes a point in almost every trade where you get to a place where your risk reward no longer makes sense. And it comes to a place where you know there's no more logical places to put your stop loss. Could you tighten this a little bit? Maybe go under here? You could. But again, you're risking a strong pullback. The logical place is to go previous structure, and right there you are 0.8-ish, 0.8-ish right there. And you're looking good. It's in, it was in your favor all the way, and now the tides have turned. Now your remaining stop loss is bigger than your remaining profit. Let me say that again. Your remaining risk is larger than your remaining reward. Now, in this case, it's close. You might want to hold it because you think you might get a profit target down here. But what if you don't? You might not. So what happens is you allow this to pull back down, and you get your first take profit. Fine and good. You close the trade. But what if it goes the wrong way? You could lose, go back to that 30 pip win. So here's where we're at. Price is currently right here and pushing down. The more it pushes down, notice the bigger that red area gets, meaning there's not a logical place now. Where's a logical place? I see structure here. I see structure here. I see some structure here. But at that point, we're so close that every little wick could stop you out. So at some point, we have to tell ourselves, there are no more logical places for me to place a stop loss. So I'm going to close this trade because the risk reward is no longer in my favor. Does that make sense? The risk reward, there's nowhere I can move this stop loss that makes logical sense according to market structure. So because of that, I'm going to close the trade and take my profits and run. So let's say you did that. There's no more places to close, to put it. So at this point, let's say we're here and you close the trade. You don't wait for it to hit the take profit. You just close it because you're like, hey, I'm done. It's, the risk is now outweighing the reward. I only have a little bit left to get. No sense in trying to push it for what? Look at this. Another 10 pips. I mean, are you dissatisfied? You absolutely have to have that 10 pips. Why? Look, you already got 65 pips. Do you really need that other 10? Nah, that's a good place that you just say, at this point, the risk reward no longer makes sense. I have used my trailing stop loss to my benefit, and there's no longer a logical place for me to do it. Now, you could place it here and just let it stop out. You'd be risking about 5 pips, no big deal. It is what it is. You can do that if you want. But for me, I just look at it and I say there's no more logical market structure places to put a stop loss. So at this point, I am going to close this trade from entry, see here, with 65 pips of profit. That is how you use good risk to reward to get a good profitable trade, good market structure, from the beginning, good analysis, good risk to reward in your favor, and use it all the way down using a trailing stop loss to protect yourself, your profits, your account the whole time. And when it no longer makes sense, we just get out. It's a powerful, powerful tool that you can use for risk management and for strategic growth in your account. All right, guys, there you have it. I hope this brought you a lot of value. We're talking about a trailing stop loss, not just how to move a stop loss. That's simple. That's easy. Any brand new getting started type video will teach you that. But I'm talking about how to use your stop loss to your benefit. And not only that, but making sure that you understand how to move it to the right place. Because remember, every time you allow price to move, that changes your moving risk reward. So that's very important to know, and that's very important to hammer down. So I hope this video helped you. Don't forget to like, comment, subscribe. hit that notification bell. If you want to become a student, go to trendtrading.academy. And if you want that merch, go to tradinggetpaid.com. For now, I'll see you in the next class.